So we got an update to our market cycle clock, and really for the first time in 18 months, we've moved out of this zone up into this zone. I would call this marginal. I'm not overly concerned about it. I mean, your returns are somewhere between kind of this whole area here. So call that roughly average, maybe a little below average. But I think, talking to Neil and seeing where we are with a lot of these things, I suspect, and if we look at the history of this, this little move higher probably had a little bit to do with energy. And I would suspect that as we start to see this continued improvement in some of the growth metrics that will start to move down here. So I don't think that this is a big problem, but we certainly have moved out of this zone into something that is a little bit more, call it average historically. One of the reasons why I think that we'll continue to gravitate into a more favorable zone is generally this box tends to push you towards the bottom right. So, as we look at this, the kind of average path should start to take us down to that bottom right. So we'll continue to monitor this. No big change from us as we see it. I do think when we look at the sector alignment, what should be happening in this zone is really more of a mixed bag, right? All the green current relative trends in materials, financials, tech, and industrials are really concentrated in the middle. This isn't an area where they either flourish nor deteriorate significantly. Those are really at the end. And even within that, right? I mean, staples tend to do pretty well in the zone, and they're just not. So I think there's a transition that we're seeing here, and a little bit of a mixed bag in terms of the performance with sectors and the like. I don't think it's unexplainable. In fact, we'll get into that, but I do think that there is going to be this period, probably for the next three months or so, where we have some consternation around the winners and losers